I'm John Hanna with CDTV.net in New York, and we have Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. Good afternoon, sir.
Good afternoon, John.
How are you today?
Well, we're doing well. A busy Monday. How about you?
Well, busy. There's a lot of mergers and acquisition happening today. It's mergers and acquisition date, Monday. So, Greg, what do you have for us for the market week report?
Well, John, we take a look at last week. It was another painful week. It was capped off by Friday's 172-point drop in the Dow. Extended equity's slow, steady slide downward. Over the last 6 weeks, the S&P has fallen 6.8%, while the Dow is down 6.7%. And the NASDAQ and Russell 2000 have fared even worse, almost 8% and 10% respectively, losing since the beginning of May. So along with the global Dow, both now have given up all the year-to-date gains. Meanwhile, the yield on the 10-year Treasury remained under 3%. So people have fled to the 10-year Treasury for safety during this downturn in the market. Year-to-date, the Dow's up about 3.23%. S&P's up about 1%. NASDAQ down just a hair, about 0.3%. And as of today, June the 13th, around noon Eastern time, the markets are vacillating between positive and negative, just a hair as we speak right now. The last week's headline, John, really consumer debt rose in April at an annualized rate of 3.1%, according to the Federal Reserve. And that's a seven consecutive increase, monthly increase. And also we had 4 of the Federal Reserve's 12 districts reported showing slowing economic growth over the last 2 months. But the rest saw continuing moderate expansion. OPEC members failed to reach an agreement on whether to increase the oil production to compensate for the Libyan conflict. However, Saudi Arabia reportedly said it would increase its production to ensure adequate global supplies. So really, no major decision there on OPEC. Oil did rally afterwards, after that announcement. And we had the U.S. trade deficit fell to its lowest level in the year in April, according to the Bureau of Economic Analysis. The reduced demand for oil and the result of higher prices and a weaker economy, coupled with the supply chain disruptions caused by Japan's multiple disasters, cut imports while exports increased. And in the U.S., the U.S. continued to live on borrowed time with regard to its debt ceiling. Fitch Ratings warned that the nation's debt would be put on watch for a downgrade if the issue wasn't resolved by early August. So really, we got kind of the summer blues in the markets. Nothing really spectacular. The earnings season pretty much wrapped up for the most part, and watching, waiting for June 30th, and when the earnings season begins again July 1st. Inflation numbers this week, John, will be watched closely, while retail sales will suggest the consumer's willingness to spend. And then we have the quarterly options expiration at week's end, which could bring some volatility on Friday.
That's Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma, and I'm John Hanna for CDTV.net in New York.